Katrina, following your optimistic view of cut rates in this and next year, how do you see it will give impact to our currency as an emerging market?
Yeah, that's a really good question. And so what we've seen is emerging market currencies have come under a lot of pressure over the past, year and even further back than that. As a result of the US dollar strength, that's of course come from this higher for longer, Federal Reserve monetary policy stance. And so our expectation is that when the Fed does start to ease rates from September onwards, that will start to ease depreciation pressure on emerging market currencies. And we should see the Rupiah start to gather some strength in the later part of this year. That's provided, of course, that the Fed actually does deliver its first rate cut in September.
And how it will impact central banks' policies, such as Bank Indonesia? Do you see Bank Indonesia has a room to be ahead of the curve?
So our expectation is that Bank Indonesia will actually, stay the course and hold rates where they are for a little bit longer. And we don't expect rate relief will actually come until the first quarter of next year. So there's still some way to go with that high interest rate environment in Indonesia. They have flagged that Rupiah stability is a top priority. And so I think, leaving rates for higher for longer in Indonesia does give the Rupiah that kind of breathing space to, strengthen a little bit more compared to its peers, because I think it's really important to remember that a weak rupiah does have pronounced impacts on the economy. I mean, on the one hand, sure, it does help export competitiveness, but on the other hand, it does really add to import costs, particularly for raw materials, and also adds to household pressure for those, typical non-discretionary goods that are imported. So, that rupiah strength that's expected as a result of the narrowing interest rate differential should provide some release to households and also businesses, late this year and into next year.
After the first quarter of 2025, if there is a cut rate of Bank Indonesia, do you think another cut will be aggressively?
So it really depends. I think, Bank Indonesia has really left the door open to be guided by what happens with the currency, but also what happens to the data as well. I mean, overall, the economy is doing, it's in decent shape. And so they're not going to be in a rush to ease policy settings because they don't really need to provide that additional support. So I think they really will be guided by, what's happening with financial markets and also globally as well, because there's that huge uncertainty around just how quickly global monetary policy settings are going to be eased back, not just in the US, but in Europe too. And so they really will be following the lead of other global central banks when it comes to the speed with which they ease monetary policy settings. But given that a global recession is looking less and less likely, we don't need to have that aggressive pullback in monetary policy settings. So it should just be a gradual easing, I would say, in Indonesia.
How do you see the resilience of Indonesia banking industry during the high interest era?
Yeah, it's an interesting question. So I think it's, high interest rates are obviously, they really do pull back on growth, and they certainly hurt the financial system as well and put the financial system under pressure. But I think what's been really interesting in Indonesia, and a fortunate development, of course, has been the fact that there has been, high commodity prices, last year, which did provide some important support to Indonesia. And so, it's interesting now that commodity prices have come down, that sort of pulled back. But households, they remain in decent shape as well, and the business environment does as well. So overall, the economy hasn't proved as sensitive to interest rates or to high interest rates as what could have previously been expected going into this tightening cycle.
How is the perspective of global investor to Indonesia's financial market these days?
So I think that, the overall view of Indonesia's financial market from an international perspective, is quite positive, to be honest. I mean, what's been interesting and a nice benchmark of that global perception could be, via looking at how the rupiah has performed relative to its peers in Southeast Asia. And I think, it's pretty much on par. We've seen the rupiah is is down around about 5 to 6% against the greenback, which is similar to what we've seen with the, peso as well, and with other, emerging market currencies. So it hasn't seen that severe depreciation. And I think that's a positive thing. And it also, is a reflection of the fact that Bank Indonesia has been, really on the front foot trying to make sure that we don't see pronounced rupiah depreciation, which could trigger, capital flight. So it is, a reflection of the fact that Bank Indonesia has really maintained that stability, and also continues to reassure markets that, Indonesia is a stable place.
Then what makes the capital inflow is not significant yet?
So I think what we're seeing is that, because we're not seeing, easier monetary policy settings, that's kind of calming the depreciation situation in Indonesia. And more broadly, what we're seeing in the economy is that, GDP growth is holding up quite well. While commodity prices have come down, domestic demand really remains the driving force of the economy. And so that's providing an important support, when other economies might be cooling, for instance. What we're seeing in Indonesia is that ongoing kind of, domestic demand, household consumption strength really shine through.
What about the political transitioning? Do you think this is the main reason the capital inflow is not significant yet?
Yeah, so I think that that's an important driving force. And if we look more broadly at, some of the policy developments in Indonesia, with a particular focus on infrastructure investment that the government has been pushing forward, I think that that's an important kind of milestone that is continuing to reassure, particularly that longer term investment pipeline, particularly looking at foreign direct investment. That's helping to, kind of reassure investors that Indonesia does remain an upbeat area and an upbeat economy, and it's continuing to unlock bottlenecks through that ongoing infrastructure investment that should continue to unlock Indonesia's potential going forward.